This is the Alternative Investing Advantage podcast from Advanta IRA, where we show you how to explore investments beyond Wall Street and open your eyes to new options for your portfolio. It's time to take control and give yourself the freedom to choose where you invest your money.
Hi, and welcome to another edition of the Alternative Investing Advantage podcast. My name is Alex Perny. Today, we are pleased to welcome on David Dippong with DippongRealEstate.com and a real estate agent with Compass Realty as well. David, thank you so much for being on with us today. Give us a little bit about your background. I know everyone kind of has an interesting story of how they got into real estate. Not too many people go to college and say, hey, I'm going to study selling real estate and helping people, achieve the American dream. So, we have a lot of real estate investors and real estate professionals on this podcast. So always interested to know how you kind of got to where you're at. So thanks again for being on with us, David.
Great. Thank you, Alex. So I've been in real estate a bit over 7 years now. I was actually a private chef more than a decade ago when I came out to Los Angeles. And what I learned was I'd get paid a lot of money for a job like that, but I didn't really learn how to leverage my own finances into anything. When you have a job like that, you work a lot, you get paid well, and you tend to spend it. So I really wanted to switch into something long-term where I could not only benefit myself and work less hours, but also help people in the same way. I'm providing a service, I'm providing a need. So I got into real estate years ago and I just started loving it. Like, this is, especially where I am, Los Angeles, Orange County, it's a tool that can offer you financial freedom without ever having to create or sell $1 million business, achieve anything out of the normal besides paying your own monthly mortgage.
Yeah, absolutely. It's definitely kind of an interesting opportunity that real estate gives people because, you don't need the, fancy degree to, get into it. You need to understand some things, obviously, but, I think everyone kind of understands real estate can certainly build wealth and everyone needs a place to live. And, as long as you're able to talk to people and convey messages and, act with integrity, typically you can do all right in real estate. So it's definitely interesting to see, again, someone coming into it from a personal chef. I've had people that have come in that have been police officers. I've had people that have come in that have been, immigrants to this country with $5 to their name, have built multi-million-dollar real estate empires. So it's always cool to see kind of, where people come from in real estate, because it is not like talking to a stockbroker where it's like, okay, well, where'd you get your degree in finance? Where'd you get your degree in economics?
Yeah.
It's definitely interesting to see that background. So in the preface to this conversation, when we initially spoke, it kind of brought up some interesting points of, kind of what we want to talk about is that, especially in high population density centers, especially for places like LA that you're in, or places like Miami and Florida, or New York City or Chicago, or places that are, have perennially been very high price point markets that really do nothing but continue to go up in price because people continue to live there in such high numbers. The path to home ownership that is getting kind of harder to identify for a lot of people. And, obviously rents, it's, you're not building equity. You're not really getting to the place that you want to be and very fast. So you've kind of developed a few things that, tend to help people in that scenario. So let's kind of dig into that, because that's what I really want to talk to you about.
Okay. So a lot of people take a look at people's hardest issues with becoming a homeowner is, one, that they don't believe they can. And two, that they're not willing to, if it's not going to happen within a certain amount of time, like a year, they tend to be unwilling to plan that far ahead. It's a lack of long-term planning that I think we can change with some basic educational tools. And that's just not something you see when people are younger. So a lot of my job is just educating people, because there's always going to be people who just have the money and get gifted the money from their parents and can come with 30% down, like at any price point. But the average person is building wealth from zero. They're not building wealth from an extreme place of power. So in my industry, with the prices the way they are, there's a lot of 3% down, 3.5% down, 5% down, closing cost assistance loans that are for lower income individuals or people who might not have access to the 5, 10, 20% down payments. And those programs typically require a little bit longer of prep. So you might need to file your taxes a different way for a year, or you might need to get in line for this program that covers people's down payments and closing costs. But the line for that program is 8 months out. So these are really things you have to get connected with an individual, a real estate professional, somebody to help you 2 years before you want to buy, a year before you want to buy, so that at the very least, even if it takes longer than that, you've had somebody there who knows your situation, who has you applying to everything that could possibly help you, who's there to help you with the accountability of just believing in yourself and taking the action to become a homeowner.
Sure. So let's talk about, you mentioned some of these types of programs. I think, the big ones that come up, people think about, oh, you have FHA loans, and, I'm not really familiar with too many of the other ones just for the course of my professional career. I don't really run into a lot of, kind of the owner occupied property realm. So, you're talking about these things that people need to start with a pretty good runway. And, again, a lot of people, kind of thinking, hey, if I'm buying a house, maybe it's most of the time people think, hey, it's going to maybe a 3-month process or maybe a 6-month process at the worst end of the spectrum. So when you say something like, hey, you might need to start this a few years in advance, that might be a little bit of a shock to people. So let's kind of break that down of, maybe why you need to start so early and what are some of the advantages and the reasons why people, especially in places that have such high price points where you need to take advantage of different programs, what the benefits and the reasons why you said those kind of things.
Okay, so to first cover the why you'd want to start in advance. If you're in your 20s and you're going to college and you're in the position of your life where you probably need to sleep the least. You're able to work the most. You still want to have fun, but you have the least amount of bills you're ever going to have. You don't have kids, you don't have responsibility. So if you start planning to buy a home when you're early 20s, 23, 24, and you just put away 300 a month or 200 a month for those few years before you expect to be able to afford the monthly on a home, you could come to the point where you have that 5% down by your late 20s and your first property is well and achievable. You get a good job out of college and you already have the funds. You don't even have to think about it. It's just a logical conclusion that you put a down payment on this property so that you have something. So a lot of people start thinking about it when they're pregnant with the kid or when they have the need or when they've already run out of space. And it's like, okay, well, what have you done? Well, we haven't really done anything yet. So now we have to work backwards from the goal of buying to how much funds you'll need if you qualify with these two programs to how much can you save each month. And we build out this plan for you. And at that point, yeah, it might be a little shocking to say like, well, based on what you're achieving right now, it'll take 3 years to get there. Or if somebody works an additional job 2 days a week, a year and a half, and you save all of that money to get you closed. Another thing is we're back in a market with higher interest rates, like your dad's or your grandparents' market, who may have been buying in the teens in the 80s. So you have to plan for more of a starter home in this market, meaning you have to buy something that you may not necessarily want to live in, or you do want to live in, and turn it into a rental and just keep it for the next 5 to 10 years, because that property will turn into the down payment, funds, and savings you need to buy your forever home. So you're basically committing to doing a little extra planning in these 5 years so that every year after the age of 60 is better. Mm-hmm. So that you can have multiple properties by then, so that you have options if financial issues or challenges or opportunities come up that you would need to have a large sum of money in. Well, once you have the property and it achieves that breaking even point, it's just now saving up money for you to use on other things.
No, yeah.
So
absolutely.
some of these,
go ahead.
So some of these programs are like the Neighborhood Association loan, the NACA loan, NACA. It's a loan that works in California, but it requires you to go to a webinar and to work with a lender that they approve. And then you have to tell them I'm your agent and I have to communicate with them. And that loan, the NACA loan, could take 12 to, I've seen it take 18 months for somebody to finally get their meeting to then get most of their down payment and closing costs covered. So in the meantime, even if you are trying to save, what do you have to lose by being in line and doing this few hours of work you need to do for this loan that could change your life?
Sure. So what's the give us a little bit more information about what a NACA loan is, because I've never heard about that. Like what are some of the things that go into that? Is it an income threshold loan? Is it for only people in
Yes.
specific areas? What does it take to qualify for that? And what kind of properties could you potentially purchase with it?
Okay, so it's more of an income specific loan. There's another loan, the LIPA loan, the LIPA. It's a loan, a low income assistance loan for Los Angeles in particular. But NACA is more of a California wide loan where they first make sure that you've made all of, even if you're not saving, you've made all of your payments on time for the last 2 years. So they know you're reliable. They make sure you have at least a minimum credit threshold. They make sure that you've gone to the seminar, that you've filled out all the information they need from you, and then they put you in line basically. So if you make enough money to qualify out of it, let's say, you can still use an FHA loan, which is 3.5 down. You can still use a conventional 3% down loan. There are still some lender programs that pay for your closing costs, but this loan is for the people who absolutely can't do that. So all you need to do is basically do some education and make sure you don't miss a payment on anything for a certain amount of time, and they will attempt to help you buy a loan. Does that make sense?
Yeah, no, it definitely does. So what do you know off the top of your head what the income limitations for that type of loan are?
So I believe low income in LA right now is 70,000 or less
For a household or individual?
for an individual.
Okay. So gross 140 household. I'm assuming they double it for a household, right? If you're married or not.
No, for a two-person household, it's close to 100K per year.
Okay.
So it
So
doesn't double quite, but it goes up by segments depending on how many people are working. And I'd have to take a look to know what they are right now, but
yeah, I'm
at
sure
any
it
given
sure.
time,
Yeah, I'm
they
sure they
change.
yeah, adjust for inflation. Yeah. And then what's the maximum amount of that loan? So like how big of a property can you buy with that?
So they want you to buy an owner-occupied property, which typically means
Mhm.
condo, home, duplex. They don't, hypothetically, you can use it for a 3 or 4 unit as long as there's a vacancy that you can live in. But it gets harder because you have to make sure all of those rents are covering some of the mortgage. So they'll start using, okay, you want to buy a duplex and the duplex makes $2,000 a month on its other unit. How can we use that to qualify against your mortgage and to increase the amount that you can qualify for, just in case duplexes start like in LA, they start at about 600, even if they're in, let's call it less than great condition.
Mhm.
So it's all to help the buyer qualify for as much as they would need to get something.
Sure.
And they would cover, you would come with 1 or 2% down and they would cover the rest. But then there would be more strict rules, like you have to live here. You
Yeah.
can't rent it out. This would be you live here for 5 to 10 years, and then when you sell it, you can get a new loan. You can use the equity that you've saved up to buy that next property that you have much more freedom with.
Now, what kind of restrictions are there for refining a loan like that?
So there really aren't many. As long as you refi into another occupant loan and you pay it back, you're good.
Yeah.
So it's just you have to talk with them and go through lenders that they approve.
Okay, gotcha. And then from there, is there a specific PMI component to that loan, or is like how does that bake into everything?
So basically they lower it. So it's a lower than a it's lower than a conforming or a high conforming loan.
Yeah.
So you get a better rate, you get a better payment, they cover the cost for you,
Yeah.
but you
No, I
have to
know.
live there. So you're
Yeah.
trading all of that for having to live there.
Yeah. I know for my wife and I's first house, it was our PMI payment because we couldn't quite get the full conforming 20% down. But yeah, it was not a pleasant payment to be making every month. It was a good chunk of money.
Did you make it to 20% and refi your mortgage insurance out?
So with our house, we made it to 20% and then got an appraisal out of it. And then we refied a few years back at like 2.75. So yeah, I don't know what I'm going to do. It's just like we did it and I'm like, oh, this is awesome. And now it's like, well, okay. Like I don't want to like move, but I also don't want to. I like where I live. But it was yeah, we missed like the very bottom of the market by a few weeks, which would have been kind of fun, but what can you do?
Well, you know what they say about timing the market.
Yeah, if you think
But
you
now
can
you
time
have
the market, you've already lost.
yeah, you already have this home now. You're in the next step where you can say, okay, I mean, a lot of the game for real estate investors and just people in general with real estate in their portfolios never sell. So if
Mhm.
you don't have to sell that property, you can keep that loan. You can see what your property can rent for. You can
Oh
use
yeah.
an equity line of credit to put on a down payment on the next home you're going to need. But now you have all these options that somebody who just has money in the bank does not have. You have all the options to go, okay, well, how about we live here? How about we add a guest unit in the back? How about we take this money and we move? Or, something happened and we need to pay for college. Like, how can we keep this loan and still take the money? You have all these options that just
Yeah.
that people who are renting don't have.
Yeah, that's the big benefit to homeownership that I think is thankfully becoming much more apparent to a lot of people. And even on the investing side of things, that's what we deal with here at Advanta is, the benefit of not only doing it personally, but basing a retirement plan around tangible assets as well is, hugely beneficial to people. And again, can't give tax or legal advice to people, but they're not making any more real estate. If you look at any of the top I would wager to guess the top 1,000 wealthiest people in the entire world. I would be shocked if there was more than one of them that didn't own real estate of some form or fashion and some
Yeah.
portfolio. It's there's a reason that those people do it, and you don't have to be a gazillionaire to get into it. So not to pontificate on the fun parts of what the rich people are doing, but that loan is definitely interesting, and the fact that it does have some more traditional components. And you said it was at 3% down that they have to come up with, or was it less?
So it just depends on your situation. The more you come down with, the more they can qualify you for.
Okay, yeah, sure.
So, you need at least 1%.
Okay, so 1% is the floor on that. Now, what was
Yeah.
the other one that you'd mentioned? It was
So
like
LIPA, it's a low income assistance loan just for the Los Angeles area that I haven't worked with in a while. So I'd have to refresh myself on the
okay,
specifics. But basically, if you're low income and you're looking to buy a home in the Los Angeles area, the greater Los Angeles area, anything that's considered the city of Los Angeles, you can apply there and then start waiting in line and then come up with your lower down payment, closing costs, etc. And they have some, just like with FHA, they have some more specific criteria that you need to adhere to when buying the home. But if your options are don't buy or have to use one of these loans, then it's a little bit more laborious.
Mhm.
The option has to be go through the steps and buy because we're
Sure.
rapidly entering an age in LA and Orange County where if you don't buy something now, if you don't buy at least anything, something that you could fall back into if you ever needed a place to stay, rents will outpace your income. So you'll either buy something at some point in your life, at least one thing, or be priced out by the time you retire. People might live to 100. Social Security, I'm not sure all that stuff is capable of funding the cost of living here for everyone, no matter how long they live. So at the very least, it's just a benefit that you have a place that you could always fall back on, a place that's always going to be filled with equity, a place that's in a neighborhood like LA, where historically, over the last 40 years, it's had almost a 7% year over year appreciation. And that's over 40 years. That's not like we're inflating it with, like, the last 10 years were about a 9% year over year. That's a crazy market. But you have to, you know that at the very least, this asset will protect you from
Mhm.
inflation, from other things that might cause you to lose your home or have to leave the place you grew up.
Yeah, absolutely. And it's, it's not an inconceivable thing, granted with what property values are right now, it's you know, the houses that in the area where I live here in Florida, they're like the ones that, I'm around and in and live in, about $500,000 to, maybe let's call it like 375 to like 600 around that area. Granted they were purchased in the 70s or built in the 70s and the 60s and the 50s for 10,000, 20, 30,000. So you look at a 60-year runoff and you have multiple X's of your capital. Granted, at this price point, you may not see that. But again, to what you're saying, you know, you can't necessarily, you have a tangible asset that can provide you utility, which I think is a big thing. Stocks and bonds can go up and down, but if you don't have a roof over your head, that's all well and good. So, having an asset with a utility and investing, and not just, your personal residence, but something that can offer you some type of financial benefit to, whether or not you want to move and then rent it out, creates an additional income stream. The thing I really like about real estate that I truly believe in is the fact that it's an asset that offers utility. It's not just something that gives you money, because money is just an exchange tool. It's, money doesn't
Exactly.
put a roof over your head. You can burn it and create heat. So there's that. But,
Yeah, there's some potential energy there.
yeah, but past that, it's not going to, I like things that have utility. And real estate definitely does that. And, when we talked, you had mentioned kind of a general concept that you had been proposing, where it's, again, you're talking about people in low income with these different loans, and while $70,000 means different things to different people across the United States, that is definitely low income. And somewhere like LA, somewhere like Los Angeles, Orange County, I know that for a fact. We have some family out there, and that's certainly definitely low income. So when you talk about that, so let's say they qualify for this, you kind of talked to me about being more of a stepping stone, kind of a rung in the ladder, if you will, to get to somewhere, with an eventual goal of, again, not being the the home that you want to keep forever. So talk to me through that process a little bit about why
Okay.
you kind of go with this trajectory.
So it really is a tool that, for lack of a better term, can build generational wealth. So you might not be able to enjoy your real estate funds until post-retirement, but if you say buy a home, which isn't unrealistic, buy some kind of a home in your 20s, and then you buy another home within, or you save up enough down payment within the next 10 years to buy another home. Well, then 10 years after that, now you're 20 years out from where you bought the first home, and you've probably refinanced the monthly payment down, worked to make that a better investment. Suddenly, now your real estate is a rolling asset. So now you can take equity out of the first one, as long as it doesn't supersede what you could get for that property rent-wise. So you can still always break even on that property or make a little bit of money. And you can put a down payment in on a third house. And suddenly now, even though you're talking about buying 3 properties over 30 years, right? Not too fast. You have time to save. You have time to save your money. You have time to get promotions. You have time to do all this other stuff in your life. But by the time you get that third property, say you want your family to stay in that area long term, well, now every 5 to 10 years, your kids can take the equity out of one property and buy another one, put it down, buy something for their kids. And suddenly now you have 3 properties buying a fourth one, 4 properties buying a fifth and sixth one, 6 properties buying a seventh and eighth one. And the more properties you have, the easier it is, which is why you always see people with either a lot of properties or no properties. Somebody has to put the work in to start this wheel, to start this cog that's just going to create generational wealth for your family. It might, be a little bit harder on you. You might be the first generation trying to build this type of wealth, but your family is going to be able to stay wherever they want if they have a tool like this to leverage. And that's really the benefit of what it is, because you're already going to live all this time. So why not slowly enact a plan that's going to benefit your family for the foreseeable future?
Certainly. And when it comes to, trying to do this in, an area, let's again, focusing on kind of the market that and understand. You mentioned kind of buying basically one property a decade, which, again, I don't
Yes.
think is, inherently unrealistic, so long as that, granted you're trying to better yourself. It's, not just something where it's not something where you put in there's no input on one side of the equation. You're gonna have to put in
Yes.
work and either try to double down and making real estate your career, or work hard at your job, save money, be able to do this kind of thing effectively. But are there any specific challenges that you would see from a place with a population center as dense as Los Angeles? Because different areas have different issues. You have more people, you have more crime, you have more diverse segments of everything. And not to say that crime is any worse anywhere than in LA than anywhere else, but just with more people, more things to kind of consider. Are there any types of things to kind of look at when looking at high population density centers? Because obviously no one wants to say, okay, well, this theory sounds really good, but if the property, all properties are not created equal. Buying something in the worst part of anywhere and expecting to be able to rent it, if the tenants leave because there's bullet holes or floods or whatever the issues are, what kind of issues do you see? And is it something where you are you still contending with like shifting like neighborhoods and things like that? What are some kind of issues that are
So,
maybe unique to that kind of population centers that you see out there?
I mean, you've hit the nail on the head to a certain degree. Like, it's doable. And in an LA, in an urban center where you lower the risk by focusing on places with development in business and transportation. So a lot of the hang up is what you just said, which is like people remember that area not being as nice, or people remember that area being a little more dangerous than Beverly Hills or Santa Monica, but marginally, most areas are probably more dangerous than those high net
Yeah.
worth areas. So you have to look at this place as like, well, you might not have thought you wanted to live in Inglewood, let's say. But if you had bought in Inglewood 10 years ago, you would have at least doubled the price of your home because of all of the development, the stadium, LAX being so close, it being still relatively close to the west side. And now they're building transportation, a Crenshaw light rail line that'll eventually go all the way to LAX. Well, if you look at what happened in West Adams, which is a city just a bit east of the west side of LA, they built a light rail going from downtown to Santa Monica, and the properties within a half a mile of each side suddenly increased in value because you could now live there and work in higher net pay areas. So
Sure.
you can focus on these areas that might not be as nice as you want them to be, but are close to the most development happening now, because those are the safest bet that even in a short-term downtrend of the market, the city's investing money here. This area will improve faster than just say the next area 2 cities over that maybe isn't getting the attention that these areas are getting right now. And you
Yeah.
see it in any city we see development in LA, because LA is spread out with a lot of cities. Development comes in, prices double, and then people move to the next most affordable city just on the limits.
Yeah, certainly. And what I like, the point that you brought up that I think is a good thing for people to take away, is that if you're looking for areas to invest in, the ability to have like a mobile kind of workforce. And again, with how remote work is becoming, it's maybe not as apparent, but still, the ability to get easy transportation into an area that maybe didn't have it before, that allows people to come from other areas quicker. If it's in a emerging market or has the cheaper real estate per se, that's a huge benefit, especially in somewhere like LA where the traffic is horrendous. or places, pick places with bad traffic, your LA's, your Atlanta, Houston, if you have places like that where, traffic is terrible, but then you have something that either like a subway or a light rail or something that makes the utility of that property improve, that's kind of a permanence. They're not going to be like, oh,
Yeah,
well,
they're not going to let it go down. They're not
yeah,
going to let the train fall off the tracks and stop
yeah,
using it.
exactly. And there's laws to that too. If it's public transportation, like they're under the hook to, maintain that stuff. So you have like built-in utility to the property as opposed to kind of established utility in a place like Beverly Hills where it's nice. Everyone knows it's nice. It's got nice things, but like, like you said with Inglewood, which again, I don't know LA all that well, but I'm assuming it hasn't been a nice place for the entirety of its life. Getting things like a light rail, getting things like a stadium, proximity to massive international transportation, those are some things to look for. They're not kind of rocket science things. And again, that's what I love about real estate is that anyone can see the benefit to that. You don't need to be an economics expert or know how to run crazy Excel macros. Oh, it's got good transportation. Oh, it's got new amenities. Okay, maybe I want to buy there. It's easy things.
You don't even have to get it right. You could buy 3 years on the other side of a downturn and still wait long enough, and it will become a good investment. You just have to keep it. So it sort of takes a lot of the guesswork out of investing of like, at least I have this thing. And you can buy in LA with like the standard 5% down loan up to 1.1 million. And depending on your income, of course, you're going to adjust the budget to make a monthly payment that you can actually afford without overextending yourself financially.
Yeah.
But you can take this and buy it with an owner-occupied loan, a lower rate than an investor would, and then you can live there for the first year, and then use another owner-occupied loan to buy somewhere else. Or you can rent that place out and go rent a thing in the city you want to live in, and just know that this property that you have is something you're going to be actively investing in over the next 5 to 10 years. That even if the rents don't quite make up the monthly payment, you're actively investing in it. You're not wasting that money. That money's going to a purpose. So maybe you don't invest in something else the first 2 years, or maybe you don't travel as much those first 2 years, but you're investing in this thing that once you get it going, the momentum will take itself.
Yeah, absolutely. And, to that point of, finding utility where you're going to be utilizing programs that are out there, because there are plenty of programs, especially in high population centers. And that's a nice thing, people, complain about, these places that are impossible to live in, again, your LA, Chicago's, Miami's. But, these are the places that get things like light rail systems, that get things like large international hubs, that get big stadiums. So, yeah, it might be tough, but, there are tools out there to help people and they get these kind of more lower income assistance programs for loans and things like that. I'd be, places where I live, we don't get it, even though real estate is going through the roof, but hey, you can complain if you want, but, those are some of the kind of benefits and it's good to talk to someone that can, kind of, literally talk about the things that people need to hear with regard to, okay, well, yes, it stinks, things are expensive, but there is a way forward. People, it's not just BlackRock coming in and buying all these properties. It's not just these multi-millionaires that own all these rental properties. There still is plenty of room for the mom and pop in these markets. And you can utilize this again to build that generational wealth and to get to where you want to go. It's not going to be a lottery ticket. It's not overnight. You're talking about buying a property a decade till you're 60. But hey, when you're 60 and you have 4 or 5 rental properties, that's a great place to be.
Yeah. And it's not easy, but you're trading your time, which is the resource that you have and everybody has, in place of their money. So you're trading time plus money to achieve the same thing. If you even if you bought it 500,000, which is a relatively affordable price point for LA, but you have 6 properties over 60 years, like you said, you're still, even if those properties never grew in value a single ounce, which is, of course, they're going to, but you're still sitting on $3 million in equity once those things get paid off.
Mm-hmm.
First one gets paid off, second one, you can find a way to live off $3 million. You can figure it out to stay somewhere.
And if you can't
leverage this.
Yeah,
You know,
if you
do
can't
what
figure
you
out a way
need
to live off that, then I don't know, maybe shame on you, but I'm pretty sure most people could figure
Yeah,
that out.
most
But
people are not going to see that. So,
exactly. That's a good problem to have. If you have $3 million in equity in anywhere you live. But we're kind of coming up to the end of the time.
sure.
Is there any kind of like parting things? I think we've covered the utility of real estate. Some high level things about how to identify good places to buy a first starter home to kind of springboard you into the home that you want to be for your ever home, whether or not you want to continue to have multiple properties after that, or you just want to use that as kind of a cash mule for your life and being able to utilize that. Again, benefit rolling in, frequency of buying properties, and again, some of those important like lower income home buying programs. And again, while the ones that we talked with you are about specific to LA, there are definitely ones in either high population density centers, your Chicago's, New York's, Miami's. There are programs like that are specific to those locations to help people to afford homes in those places. So again, with that said, what are some kind of parting words or any additional things that you'd like to add in, and then also how can people get in touch with you and contact you with any questions?
Okay, that's great. So I basically would leave you with 3 bullet points to take from this. Get in touch with a real estate professional that you trust or has done a great job for you in your area and ask them about these programs because like you said, there definitely are. The barrier to entry is that you might have to do some things and take 6 months to be able to qualify. Well, if you're not doing anything else, what do you have to lose? Just get out there and try to qualify for something that can get you into home ownership. The other things are, the second is just to believe that it's possible. Like, don't write it off because what a lot of people do is go, oh, properties are too expensive. I'll focus on that later when I have money. Just believe you can, even if you're only putting away $100 a month or spending a half hour a month learning about how to buy a home. All of that will eventually add up. So you want to just prioritize you and your future. And the third thing is what your professionals that you're working with can help you do is work with accountability. Because I have some areas of my life where I have terrible accountability. If you have somebody who's set to check in with you every other month or 3-4 times a year or what have you, where you're saying either we need to make these goals or we need to figure out what needs to change, you're more likely to do something than if you're just trying to do it yourself. Because I know nobody listens to their own advice, but they'll always listen to somebody else who tells them that very same advice. So those are the 3 things I would want you to take away, like little habits that'll just help you make this process easier.
Yeah, I wholeheartedly, I think those are great points, but the last one, the accountability partners, I am a big fan of. My buddies that I train with, if I miss a day at the gym on the mats, I am getting ridiculed mercilessly. If I'm the one that does it, and we feed it right back to each other. If
And
someone
it's
doesn't
not
show up,
mean, it's to get you there because they know
I would,
you need it.
the things that get thrown around that group chat, they're not very nice, but we have a good laugh about it, and we make sure we show up the next few days. So, but yeah, no, I really do appreciate you being with us today, David. It's
So if people,
DippongRealestate.com, and you're with
yeah.
Compass Realty. Anything else?
No, if people want to find me, they can come to my website. I regularly post videos on social covering topics like this because I just want the general education to be out there. I'd love it if people came to work with me, but people need to own their homes. They just need to, especially now when it's more of a investment and a commodity than it is just something that people are building too much of because they're not. They're
Yeah,
building not enough.
absolutely. All right, my friend. Well, thank you so much for being on with us today.
Thanks for having me.
Absolutely. This has been another edition of the Alternative Investing Advantage podcast. My name is Alex Perny, and I hope you all have a great day.
Want to hear more episodes of the Alternative Investing Advantage? Search podcast at advantaira.com and subscribe.